All right, so for the last 4 episodes, including this one, it'll be 5 episodes, I've gone just over borrow-lend protocols, cryptocurrencies that provide platforms for borrowing and lending. I put them into 4 categories. We're going to go through all those categories now very quickly, summarize all of them, and then tell you about the one that I think could be a very interesting opportunity, although there is a caveat, small market cap. It's got a cool feature. We'll talk about that at the end. First, my disclaimer. I'm Brian, big dumb animal, don't do what I do. Informational purposes only. I'm not a financial advisor. Okay, take a look at these. If you're interested, these first 2 exchanges I think are excellent. They have thousands of cryptocurrencies, whereas some of the markets or exchanges only have a couple hundred, especially the larger ones. If you want to invest in crypto and not pay taxes and do it legally, of course, we all do, IRA is the way to go. I Trust Capital. And stay to the end, I'll talk about my crypto school, where we go into all of these things and more, and I have courses on everything crypto. Okay, first off, I went over 3 that I would call institutional lenders. So Maple Finance, also known as Syrup, and we're just going to look and talk about them real quick and jump into their pricing. Market cap 500 million, fully diluted 500 million. Of the 3 in institutional lending, this was the largest. Now, the Syrup token hasn't been around that long. However, they have a fairly substantial platform in what they've been able to create. They've got essentially 2 different distinct businesses going after the institutional, and they also have one going after retail as well. So where they could go, I'll first say this. For the charts that don't have a lot of data, we're essentially going to look at it. We do this in the crypto school. We say, all right, well, if we think the total market of all crypto could still, let's say, 2 to 3x from here, and then we think the altcoin market might, some people say, get to 2 trillion. It's about 250 billion. So that might be an 8x from here. And we think DeFi is a great place to be, particularly borrow lend. Then on the low end, if we think it's a good protocol, we would say, well, we would expect it to hopefully 8x from here. So that would be my projection for most all of these, just as a baseline. Next was CPOOL. Smaller, 130 million market cap, 166 fully diluted value. If you notice, most of these have all their tokens out. Also institutional lending. They do have data going back, and using just some basic fib lines, we're going to throw up on some of these at the 100% line. If it gets back to its all-time high of December 24, that would be 60 cents. It's already at 16 cents. If it was at 15 cents, easy math, that's a 4x. Next, potentially 90 cents, $1.41, $1.92, $2.23. Could have a substantial run. Goldfinch. Goldfinch is interesting. It's one that I've done videos on. If you watch them or you followed me for a while, you know that I owned it. When it went up, I sold it. I got rid of it. I wasn't impressed with the progress that I thought they weren't making. Market cap 50, fully diluted value 67. Now, since that time, because they were lending to institutions, since that time, they created another side of the business, which I think just started in 25, and that's for the investment side, where you as an investor can gain access to not just lending out to some of their institutions, but to a whole bunch of funds which do private credit lending. So Goldfinch might have another go because of their sort of change in their, I should say, business model. So it's about 60 cents now. These past prices, it had gotten up to $5 or $6. So just to get back to that high of 2024, which I think was around they started to really tank, and they did, and came down, that would be almost a 10x right there. So this one, I don't think makes any sense to look at the chart, because all this past data, in my opinion, was based on the promise of a past business model, which I don't think they're executing. So where it goes from here is going to depend on how they do on the new business model. All right, those were the 3 in institutional lending. Then from there, we looked at, let's call it the OGs. We looked at AAVE and Compound because they've been around forever and they're the largest. So here's AAVE, the largest by far. As a matter of fact, some of these others use the AAVE code base. AAVE built on Ethereum, of course, 5 billion market cap, fully diluted, about the same. And it's been around forever. It has an unbelievable amount of assets under management, or total value locked, I should say. AAVE here on the weekly, going all the way back to 2021. Some people may not agree to do it that far back. I don't think it makes the most sense. I think it'd be better to do just some of the more current price action, only because so much has changed in 4 years. But anyway, it's at 33.35. It would be about a double 528 just to get to its all-time high of last time. Of course, we'd have to look at the market cap to see. But generally speaking, the next lines would be 800, 1300, 1800, 2000. So at 2000, we've got what, a 6 to 7x from there. It's already a large market cap, 5 billion. However, it is the largest and it's a go-to and it has the most assets locked. What I do like about this, because I always say volume precedes price, is the OBV, on balance volume, has done nothing but up, even in this sideways movement. So to me, I believe it will launch to the upside. How high, I don't know, but this is probably one of the most conservative plays you can make in terms of managing risk with respect to reward. Because it's such a large market cap, it's been around for so long, the gains may not be as good, but it may be less risky. Okay, next is Compound. Compound originally was only on Ethereum. This year, they came out with an upgrade. They're on some additional chains. 500 million about, 500 million fully diluted value. They're at $45. They're 100% back to 2021 would be about 800. It's interesting. That is a substantial jump. And these other numbers are astronomical compared to that. So again, this is one I wouldn't go all the way back. I'd probably look at some more recent price action to determine where that would go. It's never really taken the foothold that AAVE really took. So we'll have to see where that one goes. Not one of my favorites, but it's been around forever. Okay, the next ones we looked at were what I would call chain-specific lending. And what do I mean by that? I mean that these three are predominantly on just one chain. Now, Morpho is on many chains. I think 22. The reason I put it here is because Coinbase created Base, which is a layer 2 built on top of Ethereum. And Morpho is the number one borrow lend on Base because they chose it to be the lender against Bitcoin. So users in Coinbase, over 100 million users, that want to obtain loans against their Bitcoin are going to use Morpho. I think that's a big deal. 700 million market cap, fully diluted, substantially different because they don't have a lot of coins out. Looks like they only have about 30% out, 2.3 billion. Let's look at their pricing. Again, they haven't been around that long. 2.35 at the moment. The highest was 3.5. So these lines are going up to 5.5, 8, 10, 12. So 12 from 2.5, well, roughly about 5 to 6x. I think it will do substantially more. Regarding this bull run, I'm not sure. It depends on how Coinbase is rolling this out and how many people take advantage of it. I think there's a substantial amount of loans already. I don't think a lot of people are paying attention to this one. To me, this one's under the radar and it's going to be a good one. If you like Sui, you want to help that protocol, their number one borrow lend is called Sui Lend. 28 million market cap, only 30 million market cap, 60 million fully diluted. Very small. I think they have about 600 million TVL, so it's only about a tenth, but 60 million market cap is small. So if you like Sui, I would expect this to move along with Sui and then potentially take off even more because it's got such a small market cap. Not a lot to deal with here. 57 cents, potentially all the way up to 12. What's that, a 24x? I think this could do very well. We'll have to see how much people stake they put into Sui and how it does. It's got Raoul Paul behind it. We'll see. Next is Bonzo on Hedera. If you watch me, you know I really like Bonzo a lot. Been around for a while. Market cap only 8 million, fully diluted 28. I think they have twice that in TVL. They just came out in 2025 with their token. They have a great team. I did a video where I interviewed the CEO. Their price ran up to 15 cents. They gave up about 50% of those gains, which is typical on a fast run up. I'm a big believer in Hedera. This is the number one borrow lend on Hedera. So just like if you want Sui and you want to buy into Sui Lend, if you're on to Hedera, I think Bonzo is a good one as well. Now, the next two, which I just did, was Venus Protocol and Spark. Venus Protocol here, 100 market cap, almost twice fully diluted. Venus is predominantly the borrow lend on the BNB chain. So it had a substantial run last round, 2021, $140. I'm not going to use any of that to predict future pricing. 6.5 right now. Depends on how much. I don't follow the BNB chain quite as much. I know it's huge. Binance is huge. But I think there are some others gaining more momentum and steam. Spark was interesting because of what they do in their business model. When you put money in to lend, it's primarily just stable coins backed by some pretty large RWA funds. So they give a decent, consistent APY. They're at 6 or 7 cents. They haven't been around that long. They had a run up to 18 cents. So not a lot of data here. But again, just on the basic DeFi, I would expect hopefully an 8 to 10 for most all of these. And they have maybe 7 or 8 billion TVL on Spark. Now, the one I wanted to talk about, the one that I said might be extremely interesting. There's a positive and there's a negative. So it's called Radiant Capital. You may have heard of them. 28 million market cap, 32 million fully diluted value. On the positive side, let's see, total market size, 8.6 million, platform fees. What they have here is looping. So for me, it's not about the inroads that they've made or the amount of money that they have. That's not what I'm looking at. What I'm looking at, they just all zeroed out, must be their code, is within the app, what they call looping. If you're not familiar, what people will do, and I've done this myself, is put an asset in to lend, use as collateral, borrow against it in a stable coin, buy more of the asset, supply it, borrow against that, and keep looping it. Now, because you can only take a certain amount out, loan to value, 80%, 70%, 60%, whatever, the amount of money you can borrow against it keeps going down, not only because you're borrowing against it, but because the additional that you put in, you're only getting a certain percentage. And then, of course, you've got to be careful because as the asset is more volatile, it can cause problems. Anyway, it's a great way to obtain more, but it's very risky. All crypto is risky. It's just another method to try to obtain more of an asset you like if you believe it's on the up. And by taking out a stable coin with a low interest rate, as long as your gains are outpaying your interest, which they should substantially in a bull market, you should be okay. But what they've done here is they allow you to go up to 4 times what they call leverage risk, where they perform the looping for you. I think that's brilliant. I know we're going to see more of this. All right. Downside. Here's the downside. In 2024, they had a major hack. In 2024, there was approximately 4.5 million worth of ETH taken away due to an exploit. And of course, it went down because of that. It's also had, they said, some volatility. And of course, it went down because of that. Now, what's interesting, if we look here, they were about 45 cents. They're all the way down to about 2 cents. And it's been very choppy. However, in terms of volume, even during this down period here in price action, it has been putting in higher lows on the on-balance volume. Volume precedes price. To me, this might be ripe for a breakout. Not telling you what to do. It might be one of those where they can never come back from the issues that they had. But to me, some of these exploits, I'm surprised more protocols haven't had some issues. I would assume that's just part of the growing pains of a brand new industry doing brand new things. Will they have it again? I don't know, but I do believe I read that they have some third-party risk auditors looking at it ever since they had that issue. Maybe because of it, they'll be more vigilant than others. We don't know. I think this is a huge risk, but it could have huge gains. 2 cents, and its high in 24 was 45 cents. That's a 20-something gain right there. I hope this was helpful. As always, I hope we can all make generational wealth together with crypto. Thank you for watching. I'm Brian. Please do listen to my crypto school. I think you'll find it informative and helpful. Thanks. Love how I break things down? Then hop into my crypto school. You'll get step-by-step courses on everything: buying, selling, staking for yield, borrowing, lending, even going fully debanked. Plus, join lively crypto chats and catch my daily market updates. And lastly, if you just want to help support the channel, there's a join button just below this video.